Hello and welcome to Table Talk. I'm Tom Rea, and joining with me on the line is the experienced realtor Linda Rea and our special guest, Matt Bigelow. He is a shareholder for Doeren Mayhew. Hello guys, welcome to the show.
Hi, Matt. How are you this morning?
Good, Linda. Thanks, Tom. Thanks for having me on.
So Matt, can you let us know what you do and how long you've been in the business?
Yes, I'm a tax CPA here at Doeren Mayhew. Been doing this over 12 years. Mainly focus on high net worth individuals, large real estate investor groups, and mainly bigger business enterprises that specialize a lot in asset management, mainly with a real estate focus. So yeah, it's great to talk to you guys today.
Awesome.
Yeah, Tom, we actually met his counterpart, and we've had some other table talks lately from the networking group that they belong to with Keith and the Masterminds. And I really felt that they had some very good information that I learned from, and I would like to have him share with the public about 2023 tax changes. And also I really want to kind of gear it towards realtors too as well. I know one of the things that caught my ear when he was at the Masterminds was the things that real estate agents might be missing as far as deductibles for their income tax. So I'm going to kind of let you talk about both, if you would. First of all, the things that you think that's changing for 2023 that everybody should be aware of. And I want to kind of go two different ways. One for like the first time buyer who really has not a whole lot of knowledge about why they need a CPA or a tax attorney, or pay attention to what paperwork that they have since they just purchased a home. And of course, to the other side of that too, and is the very experienced person that has a lot of tax knowledge already, but why they could use your services.
Yeah, of course. So for 2023, focusing on real estate agents and realtors, I would say keeping an organized log of all business expenses that relate to generating those commissions of overseeing property sales is very important. All income for realtors are typically reported to them on a 1099. So capturing all of their business expenses is very important. Also making sure everything's organized, all proof is tracked, and that way when it comes tax time, that summary can be provided to their CPA, so that way they don't overpay in self-employment tax. One of the biggest tax expenses for an individual that's deemed a contractor and reported on a 1099 is you're paying 15.2% in self-employment tax. And that's in addition to individual income tax, so both the federal and state side. So every business expense that should be reported against that 1099 income is beneficial to be tracked. So yeah, not missing anything is important.
So to a new realtor or a realtor that's growing, that would be one of the first things that they should do, correct, is to get themselves a good CPA and sit down and make a plan.
Yeah, absolutely. And even there's apps out there that your phone can track your mileage use. As I had explained to you earlier, keeping a business log of all mileage. If you have designated cars that are one's for business and one's for personal, then you would still need to keep that business log of how you use that car to substantiate its business deduction against that.
And that car should be in the company's name too, correct?
If a individual has a business entity set up and they are taking a deduction for a business vehicle, then yes, it should be owned by the company because it's a company asset.
Mm-hmm.
But if they're more of a individual real estate agent that works for a brokerage firm, they most likely would not have a business entity. So although it's titled in their own personal name, keeping that business log will provide the proof that they need. If they were ever audited by the IRS and Schedule Cs, that's where all this 1099 activity gets reported. Those are high risk areas of being audited. So having that proof is a good thing to have on record.
Same thing with assistants and having people work for you. We touched briefly on family members working that's not working another job, maybe a school child that's doing some extra things to you. I know he pointed that out at the masterminds. You want to kind of go over that a little bit with them, how that works, how much they can earn without being taxed.
If you were self-employed and yes, had contract labor on activity, then yes, you would also need to 1099 anyone that works for you. So if an individual you pay over $600 for providing services, you would need to 1099 that individual for over the $600 amount. They then would report their amount on their return, and depending on how much activity they have, they may or may not have a large tax situation on the other side. But yeah, all business deductions associated with being a real estate agent would need to be documented. 1099s, the IRS has started assessing higher penalties. So if you as a real estate agent have any contract labor working for you, it's important to make sure that you keep track of all information so that you 1099 all of your subcontractors at the end of the year. We see that when clients are issuing 1099s and it comes time in January to get those prepared and filed, if you don't have the information prior to at the time of when you paid them, maybe 6 months before, it's pretty difficult to get somebody to give them the information to be 1099 later. So if you're going to be using somebody to assist you as a real estate agent, you'll want to get that up front before you pay them, so that way there's no issues there.
So again, it's really good before you dig into all of this, if you haven't had business experience prior, that realtors need to sit down and make a really good plan before they get started, because it really can be costly and time consuming if you make errors. So it's really good to ask your CPA and have one on file with you and on staff with you throughout your career. Let's jump over to, again, if they've purchased a home, any customers purchased a home right now this year, what are the tax breaks and things that they should be thinking about offering to their CPAs and accountants?
As a first-time home buyer, knowing how long you're going to live in the home is important, not just in the industry, but as even just a personal user of a home. You'll want to stay in that home at least 2 years. You're able to take advantage of the principal residence exemption to, if there's any gain on the sale of the home and you've lived in it for at least 2 of the last 5 years, then there is a allowed exclusion allowed to that gain. So that's a break the IRS, the tax law gives to owners of principal residences.
Tom, do you have any questions for him on those subjects?
So this is turned into the gig era, right? The gig industry. And so with so many different gigs, if you will, whether it be real estate related or not, how do you think those should be structured, and what advice would you give?
That's a good point. I would say people are using the real estate industry as a avenue for a second income stream. I have colleagues that, not in the CPA world, but they have I would call it a normal full-time job, and then they also freelance as a realtor. And I recently talked to one. He had about 5 to 10 grand on a 1099, and he said like he did it as another means of cash flow. However, when it came time for tax time, I had said, yeah, you want to make sure you take advantage of all of your business deductions that helped you generate that income. But he didn't keep track of any of them. So now it's kind of like he's not getting as much as what he could have got out of that 5 to 10 grand in income, because he's going to get hit really hard on self-employment taxes, because now he has no proof of deduction. So he's going to have to report all the income. So
if they wanted to get a hold of you and they had specific questions, such as we're talking about, how would they reach you?
Yes, I'm here at Doeren Mayhew, firm in Troy, Michigan, and phone number is 248-244-3237. Email address is my last name @doeren.com. That's Bigelow @doeren.com.
And you are located on Big Beaver in Troy, is that correct?
Correct.
Okay, so let's go over to perhaps the persons that have a lot of education in taxes and maybe a lot more experience, but Taxes for 2023, what are we seeing for a change?
Going into 2022 and carrying over into 23,
Yeah.
I would say there was a lot of things the IRS was doing to spur activity with different benefits. One of them being in 2021 and 22, the IRS allowed a full deduction for meals that related to business. So if a realtor took a client out to a restaurant, they'd get a 100% right off of that expense. And now going into 23, we're coming out of the pandemic. That is now going to be going back to how it always was, a 50% deduction for that meal. So that's one thing to keep in mind if they maybe did a preliminary tax planning, that this will be a small partial add back for those expenses.
Any other things you can think of that we might be missing as a realtor out here?
Yeah.
For tax deduction?
The one thing is most people as employees are able to defer income through a retirement vehicle such as a 401k, but as a contractor who's on a 1099, you don't have that luxury of having a 401k as part of your employer. So you would want to set up if that was your goal, is to set up a SEP plan. With a SEP plan, you can defer up to 25% of your compensation earned. So there's a maximum of, with the cost of inflation, it was 61,000 is the maximum in 2022, and that's going up to 66,000 in 2023.
That adds up fast too, doesn't it?
It does.
When you put that into the budget, and then again, maybe if they don't understand what a SEP program is, it sure saves them taxes every year, and it's deferred to a later age. How do that actually? It's built in there for your retirement. Right. And they start taking it out at what age? They can start taking it out at what age?
Yeah, that would be later on in your eligible retirement years. So I believe it's 59 and a half, similar to a 401k plan. But one thing that's a big tax benefit to a lot of realtors I see, or even just people in the real estate industry, if they are a qualified, known as a real estate materially participating professional, they get a big benefit to any properties they may own personally. So since it is their main activity of being a real estate professional, they then get a much better deduction out of losses that may come from properties that I would not receive as a CPA. I'm not a real estate professional, so they would be classified for me as a passive activity. When the rules are different for real estate agents, they then get to offset their regular stream of income with losses from properties. That may not even be a loss. It could be a loss generated from depreciation on the underlying asset. So that's one thing that is very beneficial to being a real estate agent.
So that would be rentals, that would be flippers, that would be second and third homes that they're leasing out.
Second and third homes, as long as they were a real estate professional.
A real estate
so if I had 2 or 3 homes in addition to my principal residence, I would still be listed as a passive activity for me. But for you as a real estate professional, you get a much larger benefit to those.
And those are things that I would suggest that if you are a new realtor or unexperienced with those items, don't try to go it alone. You need to make sure that you have, again, a CPA in your pocket and on your staff, that you not only hire yearly, but you frequently go over what you're doing, check it twice, and make sure, because the rules change constantly, don't they? It's probably one of your biggest jobs, is keeping up with the daily. It is for me in real estate. It's an ever revolving door. And if your person that's advising you doesn't have that latest and greatest, you could end up in trouble. And you work so hard for your money that you don't want to have to give it all away. And not only the money, it's the time, right?
Correct. Yeah. I mean, just staying organized is probably the biggest thing when you're a self-employed individual.
And there are ways to do that, because we get really busy. I have a girl that actually gets things ready for the CPA, that does the book work. And I mean, I don't know that you're going to start off with all of those, but over your career, you start adding and making sure that what you do in your next chapter of your career, there might be some changes that you need to make sure. And I think you can't think of one thing that would be any more valuable, and that's to have somebody in charge of your books and your taxes.
Right. Yeah. If you having a more of a organized office, you would have the ability to have an on-site bookkeeper. So yeah, that is definitely a crucial thing. I don't think people should think of their CPAs as bookkeepers, but more of a tax consultant and advisor to help with planning. So yeah, I'm not a bookkeeper, but definitely work a lot with clients that have their in-house bookkeeping. So,
well, my bookkeeper keeps it all together for him to be able, so I don't have to do that at the quarterlies or the end of the year. That way and it took me a while to learn that, by the way. It's not like I started out of the gate with all knowledge, but it takes a while, and the busier you get, the more that you realize how important that is. If you're going to work that hard again to earn the money, let's figure out how to keep it to and not get into trouble. I'm really excited about this year. We've had a lot of changes. We stay very positive, and I think that we're more prepared than we've ever been in our life to service our clients second to none. It's just making that pivot with them and helping them to understand. And I would assume that's the same in your field, to understand what the changes are going to be and how to prepare and make the best out of the year.
Yeah, absolutely. And you had mentioned briefly before about getting used to estimated tax payments. With the market turning this year and not as much activity in real estate, they may not want to pay on a quarterly basis as they always have. So having a CPA on staff, they could do more actual tax planning calculations on a current basis versus just penalty protecting on the prior year if income's not going to be as high as it was in the past.
Well, it sounds like you're full of advice, which we all need. You said you've been in the business for a long time. Is that right?
Yes, about 13 years now. So
yeah, so that you've acquired a lot of information and skills that we all need. So Tom, again, do you have any further questions that you are thinking there as you listen to us?
Or would you say it's important to update your tax structure, if you will, on a yearly basis, or maybe a couple of times a year, depending on how your business changes? Or what do you think?
Yeah, I would say not thinking of your CPA as just the individual that produces a tax return, but keeping them more on as a trusted advisor. Communication's a key in all aspects of life. So keeping your CPA up to date on your income position and what you're doing, what you're looking forward to doing is key in that as well. So
is there any particular advice that you see over your clients that makes errors that you'd like to point out not to do?
Errors, I would say, maybe being just too aggressive. If as a real estate individual, you are, as I had said in the past, put on a 1099 and you reported on a Schedule C. So you do get a deduction for your cell phone bill that is used for business purposes, but I wouldn't say it's advisable to take the entire phone. If that's your personal phone, the IRS would want to see a small allocation used for personal purposes, and that would be the same for a personal car as well. So if you're not a large enterprise to where you would say this asset is 100% used for business, which your everyday real estate agent wouldn't be, they're not a large enterprise. So just not being too aggressive and just being accurate with all of your records.
Yeah, I've had a couple cars for many years, and I find it very important. One is because when you're listing a property, they don't want you to drive a marked vehicle and show their neighbors they're moving. So I learned years ago just to have 2 cars available, but it took years of course, for me to get to that point. I just thank you so very much for your insight and information. I just have spent a lot of this month trying to figure out some of the things that we can actually share with the public that can save them some real aggravation and put them in touch with someone that they can speak to. I know that you do a lot of investing, work with a lot of investors too. Is that correct?
Yeah, so a lot more groups of they can be both real estate agents, realtors, or just individuals that have accumulated financial assets over time and want to focus more on building their real estate portfolio. They like that there's a tangible asset to it versus a stock on the stock exchange. So we deal a lot with individuals that invest with real estate, correct?
And you have a networking group with that too, correct?
Yes, the firm's always going out, sharing our knowledge and advice, and we do continue to grow in our network of our real estate group.
Yeah, there are a lot of realtors that have become very successful and do want to invest as they go. So those who may listen to this again, please get a hold of the number that Tom's going to put on the screen, and he'd be glad to advise you or speak with you and help you with either end of that, whether you're a brand new newbie or you're just an experienced person that wants to invest in a lot of larger real estate. It's really good. I find even investing outside the state has been good for us as far as rentals go. There's a lot of things that's movement in. Every single time we do one of those things, we need to have counsel before we make those wonderful decisions that we think are so wise, and make sure that we are thinking straight, if nothing more. But usually they not only tell us we're thinking straight in part, but they also straighten us out to not make mistakes. So I appreciate that a lot. And again, thanks for sharing with us today. I hope that we've done a little bit of help, a little bit of something for the public out there. And again, get a hold of the expert. That's why I do, because I'm an expert in real estate when it comes to that. But when it comes to the books, I need to make sure I have counsel. So again, thanks for sharing with us today.
Yes, thanks a lot for having me, Linda. Thanks.
You are so welcome.
And thank you everyone for joining us today on Table Talk.